Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the tech sector, we saw money rotate out of this week from the tech sector into the financial sector, and we're seeing this weakness as we end the week with a sell-off at the end of the day on Friday, a close down near the low. We have an inside bar to be watching, but look at the volume the past 2 days. That is significant volume, and it's favoring the bears. And look at the volume over the past 3 weeks. It is very clearly favoring the bears. So we have our lower high and lower low. We have confirmed the bearish reversal head and shoulders pattern by breaking the shoulder line here, or the neckline of 54.55. And if we see a bear break of this inside bar to start our shortened holiday week of 54.67, we're going to be looking down at 54.33. And then there's some gaps down here to be keeping an eye on. There's a 53.62 gap and a 53.10 gap to be watching, as those will be our targets if we see continuation, which as of right now, it does look like will be the case. So the exponential levels are resistance. The middle Bollinger Band is curling down. That's going to begin descending as resistance. And we'll be watching to see if this bear volume keeps up. It is very clear that this sector rotation is going on in the market right now. And we can see on the weekly time frame the big bear volume. We've got the most bearish action we've seen since the election. The middle Bollinger Band on the weekly is going to be in play this week in the lower $54 range. And again, been showing this monthly chart because it's important in my opinion. The monthly chart on the tech sector is giving us a bearish reversal candlestick, a volume climax very clearly favoring bearish volume, and this is coming after 7 green months to the upside. So I absolutely am looking for further consolidation because this is just bearish reversal candlestick number 1 from a monthly standpoint, and this is the chart that had me thinking that we were going to see some bearish Q3 action in the tech sector, and so far to end up Q2, to wrap that quarter up, it has really gathered some momentum for the bears that we have not seen in a while. So I'm not expecting an all-out dump, but we could absolutely be looking at lower highs and lower lows as we head into Q3 and begin the month here in July. Apple on the daily time frame seeing that weakness as well. We've been rejecting from exponential resistance the past couple days. It too is an inside bar. The bulls are trying to defend this 100-day moving average, but we have lost it the past 2 days and been unable to get over it. That's at 144.05. Exponential resistance driving the price down. Inside bar range to be watching. 143.78 support. 144.96 resistance. That is the range of this most recent trading day on Friday. If we see a break of 143.78, we look down to 142.28 and then 142.20. We have multiple supports at 142.20, so that's an important level to be watching for the bulls to try and maintain as well. The weekly time frame closed under the middle Bollinger Band yet again after rejecting from exponential resistance. The exponential bearish TCG cross is more clear. The bearish MACD cross is more clear, and we're looking at another leg to the downside if we see this break of 142.20. That's why it's so important, because that would indicate a move. After 142.20, I'd be looking at 139.48. Facebook still a strong bull as we are still keeping this 50-day moving average support. We have held it now 6 times in the last 3 weeks, and the bulls are close to losing this level, but they are still holding on. The range on the inside bar from Friday, 150.06 support, 151.92 resistance. We'll be watching how that breaks on Monday. If we lose this 50-day, I'm looking at 148.92 and 149.05 supports. We still have a longer-term higher-low pattern, and that is certainly not the case in all these tech names that we're seeing. That's why Facebook stands out as one of the strongest. Weekly time frame, clear that we are seeing some consolidation. We're on the verge of a bearish MACD cross, but we still have this higher low pattern. We have a double low on the weekly at 144.42 and 144.56. If we break those levels, that will be the trend change on the weekly time frame. As long as those levels hold, the bulls are in control longer term, and we have about a $6 range in terms of wiggle room before those support levels would break. So that's what we've got heading into this shortened holiday week. The options are going to have more time decay as there's less trading time before expiration, And we'll see if this continues to see sector rotation of money leaving the tech sector and heading into other places, including the financial sector. I appreciate you watching. Hope you have a good holiday and a good week.